3 keys to put option success is what we will be discussing in this video, ladies and gentlemen. It is being brought to you by ihavesuccess.com. ihavesuccess.com is bringing you this video because in 2023 and going forward, I believe if you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. Have you ever heard that something is simple but not easy? Well, if you have, this is the reverse. This is easy but not simple. The great news is that this strategy has some unfair advantages to it. In fact, this spot right here, right before your very eyes, boom! You saw that link pop up? That is a link to a video that will tell you about the unfair advantages of selling cash secured put options on stocks you'd be happy to own. You can check out ihavesuccess.com, the free stuff, the paid stuff. But what you're checking out right now is the 3 keys to put option success. And you know how it goes. I can't just give you those 3 keys. I got to kind of lure you into the video a little bit and give you a little more value. And hopefully you stick to the end. Next week, we've got, see these red things? I got this filtered right now. We're only seeing U.S. data. These red things are supposed to be, watch this, high impact expected. So Monday, Tuesday, nothing on Wednesday. Thursday, ooh, Friday, maybe that'll be a market mover. Look what the old heat map showed today. But let's look at the week. Since it's Friday, it's the end of the week, let's look at the week performance. Let's get rid of this. Come on, get out of there, you ad. Oh, the ad is just not going away. We're stuck looking at that. That ad. Get out of here. Guess we're going to have to learn more. Bam. Oh, it's back again. Oh, that's just horrible. But anyways, nothing I can do about that, it appears. This is what we're looking at the week. More red than green. Looks like possibly a bit of a downer week. And this is a downer part of the video since FinViz is making it difficult on me. Or maybe I'm making it, maybe it's user error. I don't know. Advancing versus declining, right? You see more red than green. Over here, you see way more red than green, making new lows. How about this? Below the 50-day moving average, almost 60%. Hey, a little bit over 60% below the 200-day moving average. And we got some different, right here, that's not in the news. Me personally, I don't really care if Elon Musk does XYZ or ABC. I'm just not much of a, just doesn't matter to me. Maybe some way you figure out ways to trade around it to make money based on what Elon Musk does in headlines. I haven't figured it out, and I'm not like a celebrity chasing type of person. Like I don't give me personally, I can't give 2 rat's tails because I give 0 rat's tails about what celebrities do or don't do. In fact, the less I ever hear about these dorks, then the better my life is. But stocks falling on banking, inflation consumes linger. Mom and pop landlords struggle with higher interest rates. I wonder if they're in single family home or multifamily. S&P 500 closes lower following disappointing consumer sentiment data. And that was right here. See how this stuff can go together? Seeing that? Again, this dork says he found a new CEO. I don't care. Sorry if I just yelled in your ear. And anything of, I'm not familiar with any of these tickers. Not a big standout to me. U.S. bank deposits drop again. Lending activity slips, flagging credit concerns. I think, to me, that is more useful information for the financial markets than Dork Musk, whatever he's doing. Now, if you were concerned about Tesla, It's been slipping, right? I believe that to be true. If you were concerned about Tesla's performance over the year, which is basically went sideways to just kind of been going down. If you're concerned about that, maybe this is going to help out. I don't think this is a big deal here. Breaks below 26,000. Okay. And you can watch, you probably won't, but if you watch videos from the past, I was thinking Bitcoin was going down. So what? It went down 4%. It's been over, I mean, it broke through 19,000. It's been over 19,000 for a while. I think 18,000 was a big resistance point for a while, if my memory is serving me properly. So sometimes these headlines, they're just good to get clicks. So if you like headlines, maybe you should make your own news website and come up with some fancy headlines. Anything in there? Strike disrupts distribution at, I'm not familiar with that company, but what I was taught is to look through these headlines. There you go. Like I honestly, like, America, maybe other places too, but I live in America, so I can only speak for America. America is so celebrity driven that I feel bad for my fellow Americans. These guys and girls, and everybody, all these other genders in between, they're so celebrity stricken that they don't go out and make a life for themselves. They just sit back and read about and fantasize about what the celebrities are doing. What a waste of a life. Well, hey, you know what? Not everybody is on earth to succeed selling put options. And there's 3 keys. There's probably a little clue you could see. A little clue in there. 3 keys to put option success. My buddy and I last night, via paper trading account, attempted to open Alcoa Aluminum, well, I guess it's not Alcoa Aluminum anymore, Alcoa Corporation put option. We were attempting to sell this put at 16 cents, and I think Alcoa went up, move against us, so that did not get placed. So what happened over here? XLU, we got 14 days left. XLU, we got a put option here at the 67 strike price, and right now it's trading around a little bit less than 70. So just looking at this, looks like a 22% chance of being in the money. Let's look at the chart for that on the quick before we get into the 3 keys of put option success. This is what we're looking at XLU, and we got a strike price right in here. Right here. It's got a bit of resistance to go through. We'll see if it happens. If it happens, good. If it doesn't happen, good. That's what's the beauty about this. No matter what happens, it's good. So our XLF put options expired oh, no, they did not expire today. We got 7 days left. All right, they're going to expire next week. And a little bit less than 7% chance of us getting assigned on that. If we get assigned, is that okay? Yeah, it's okay with me. If we don't get assigned, is that okay? Yeah, it's okay with me. Again, that's one of the beauties of doing this, putting yourselves in positions that no matter what happens at option expiration date, you are A-okay with it. What's our strike price? The $30 strike price. Had to fall down quite a bit. Quite a bit. And just going to let that ride. Sometimes I'll set up a closing order, close it out at $1, but hey, you got 1 week left? I don't care. And why would I set up that closing order? Maybe if there was like 2 weeks left and I could close it out for a penny. Not because I don't want to buy the stock, but because why not just close it out for a penny and sell another option and bring in more income? So Alcoa did not get filled today. XLU is doing great. XLF is doing great, which was what we would expect since we did everything needed to properly set these up. And let's quickly look at the 4 big ETFs of the stock market. So here we got the S&P 500. We're looking at the 6-month chart, 1 day. We see basically it's been going sideways for a certain amount of time. It's been volatile through here, starting to tighten up this range. Last time it got up to starting to test this 420-ish area, got up to around here, 415, went back down, and then didn't get so close to, well, it kind of got close to 380. Over here, it tested 380, went all the way up here to kind of test this, getting close to 420, and reverse direction. Didn't make it as far down, went back up. We're at that resistance point again, and so far it seems like there's a lot of resistance in the S&P 500 around the 415 area. We got them getting some mixed results here on the volume, right? See this volume? That's some heavy volume, you know, some big money flowing through there. That's not what we're getting. So now let's take a look at the Qs, which there's a bit of an overlap in the Qs and the S&P 500, at least in the top 10 holdings of these two indices. The Qs seem to have broken through this resistance here at the 320 area. Happened before over here though, right? And we had this pivot point around this 334 mark. So one thing that's different, if you care about moving averages at all, over here we got up to this 200-day moving average. It got close to it, somewhat close to it, pivoted and came back down. Now we passed it here, pivoted, tested, and then tested again here, and we've been going up. But still, you know, ultimately, what's going to happen around here? We're getting closer to find out. We will see. Volume, again, not looking like this. Looking like this. It might, not a guarantee, but maybe it will need more volume to break out. Boom. Oh, doggies. Well, at the moment, I don't particularly remember. Yeah, let's go with, no, let's just do this. No volume on this one, but at least we're seeing the Dow Jones. I wanted to look at some volume, but whatever, I couldn't remember a ticker that's gonna, oh, maybe let's double check. Yeah, okay, we can use this one. And we got some volume, and it's for the Dow Jones. All right, so same thing with the volume. He had a lot of volume in here, really weak volume through here, and pulling back. Like this is compared to looking at the S&P 500, looking at the Qs. This one is definitely weaker. You see, there seems to be through this area a lot of resistance, and it's not winning that battle. We'll look at IWM, giving us an idea of the Russell 2000 and going sideways below that 200-day moving average. Got the same thing with the volume going on. Seems to be stuck in this trading range right now. And what else do you want to look at? I mean, really, what else is there? There's a whole lot, my friends. Oh, I forgot. We're going to look at this. The 3 keys to put option success. Thanks for looking at some charts first. All right, let's talk about the 3 keys to put option success. Key number 1, accountability. If you are not accountable, I don't see how you're going to be successful in the stock market. There's things in the stock market that if you do not change yourself, you're not going to succeed. What's one thing that's nice about the stock market? People that have the inability to be accountable, they'll fizzle themselves out. If it's a team, they'll stick around because they blame everybody else, right? That's sort of the definition of being lacking accountability, is blaming other people. So investing is basically, it is like pole vaulting or wrestling or boxing, right? This is not a team sport. It's you against whatever you're against. And when it comes to investing, there's no one to blame but you. You can try to blame, oh, my wife, she interrupted me. Sooner or later, like you run out of it, right? A person will self-implode here. So the number one key to success, you got to be accountable. You have to. You have to be able to look in the mirror and say, I effed up or I did a good job. You have to be able to look in the mirror and say, I need to improve this or I'm doing a really good job on this. You have to. It's just that simple. If not, good luck. Correction. The second key to success is once you're accountable and you're pointing out, hey, I could have done this better. You got to do it better next time. You have to be able to correct. You see how these go hand in hand? If you can't figure out what you did wrong, there's no way you can correct it. But even if you figured out what you did wrong, sometimes people won't correct it. You got to correct. You 100% have to correct. If you continue to do the same bad habit over and over, just knowing it's a bad habit is not enough. You can continue to do the bad habit, and if you continue to do it, that's just what you're doing. You'll be doing a bad habit, and you'll be aware of it. The final thing, persistence. So when you have all three of these put together, you're accountable, you correct, and then you just keep going. And you just keep using these three things over and over and over. You're accountable. You correct. You persist. And then you look at your results, you correct, and you go forward. You look at your results, you correct, and you go forward. That's it. Now, is there some more to it? Yeah, you need some specific technical knowledge. You need to know what a put option is. You need to know what a strike price is. You need to know how to do some fundamental analysis on a stock, or you need to know what type of stock is not worth a long-term investment, and you're going to do the wheel strategy. Some stocks are a little better for the wheel strategy. Some stocks are a little better for not doing the wheel strategy. You need to know the difference between the two. If you don't know what the wheel strategy is, you need to know what the wheel strategy is. Almost everything that you would need could be found here for free, or you can expedite it. And you can pay me moolah. Just because you pay me moolah doesn't mean I'm going to work with you. I'm not using this to pay my bills, right? So I don't want any extra headaches, right? If you're a pain in the butt person, I don't want your money. Send it to somebody else. But yeah, if you're not a pain in the butt person, I want your money. I want your money. I don't want the pain in the butt. Do you get what I'm saying here? So anyway, so what should you do over the weekend, right? If you're a complete newbie, the first thing you do is you open up an account at TD Ameritrade, Thinkorswim, so you can get a simulated trading account. And I realize there's not the real emotion in here. I get it. But until you know what buttons to press, maybe you don't risk your real money. Consider that. Consider it's okay, right? Consider that it's okay that until you know what buttons to press, you don't fly a real airplane. You fly a simulated airplane. Consider that being okay. Consider that it could be okay before you go into a burning house to rescue grandma and the baby, that you do the simulated version first, right? If you don't want to, if you want to jump right into the airplane, to learn and risk falling down and dying, if you want to jump into the burning house and risk dying as you're trying to rescue grandma and the baby, go for it. It's up to you, right? I'm not your parent. So, but consider that it's okay when you're going to take a lot of risk to do a simulated training to ensure at minimum you know what buttons to press. With that, my friends, you know how to reach me right here. Have a fantastic weekend. Aloha.